Hey everyone, so the information contained herein is intended to provide general information and is not intended as a substitute for individual legal advice or accounting advice. Therefore, all persons are directed to seek the advice of an attorney or an accountant regarding their specific tax and legal situation. So you probably already consider your personal reasons for selling. Now you need to take into account the other factors involved, such as market conditions, your property's value, and tax implications. Unless you're locked into selling your home, for example, you already accepted a job offer in another city, it's a good idea to look at the whole picture before deciding to sell. First, we need to assess the market conditions. There's a rule of thumb to keep in mind when deciding to sell a home. Your home is only worth what a qualified buyer is willing to pay at the time it's on the market. The real estate market fluctuates based on supply and demand, interest rates, general economic conditions, and other factors. The same house may sell for more or less under different economic conditions. The realtor can inform you of the going prices for homes in your area at the current time. This data is included in a comparative market analysis. There are many dynamics that can affect your tax liability upon selling your home. These issues include whether you purchased a home or inherited, if you use your home for business or rental purposes, costs associated with selling your home, and any home improvements and additions that you've undertaken. The Federal Taxpayer Relief Act of 1997 provides capital gains tax exclusions of up to $500,000 for married taxpayers filing jointly and $250,000 for single taxpayers or married taxpayers filing separately. Current capital gain rates are 20% for those in upper tax brackets and 10% for those in lower tax brackets. Overall capital gain rates have been lowered even further to 18% and 8% respectively for assets acquired after December 31st, 2000 and held for 5 years or more. To qualify for this tax break, you must have used the home as your primary residence for at least 2 of the prior 5 years. If you relocate for your job but don't meet the requirements, you may be allowed to take a capital gains exclusion proportionate to your circumstances. This exclusion is not a one-time benefit. You may take advantage of it once every 2 years as long as you meet the qualifications. The tax rules differ when you sell a home that you've inherited. If you sell the inherited home for a profit, you're required to pay federal and state taxes on the gain. If you keep the house as a second home residence or eventually move into it after renting it to tenants, you may take the $250,000 or the $500,000 capital gains tax exclusions if you meet the requirements. When you're deciding what to do with inherited property, you should consider the current estate laws and basis practices. Beyond these general rules, it's wise to discuss your home sales with a tax professional who can advise you on the tax benefits in more detail. Finally, timing your decision to sell is very important. Because most sellers finance a new home purchase with the sale of their present home, they usually put their home on the market before they begin to search for a new home. Learning the price you can expect from the sale often sets the pricing parameters for your new home search. Obviously, it's not wise to wait until the sale of your property closes completely before beginning to look for your new home. Timing your search properly with the buyer's transaction can make the difference between having the available funds to buy a new home and cutting down on the interim period between homes. Thank you for watching my video. I hope this information helped. If you liked the video, please give me a quick like. If you have any questions, comment below and remember to subscribe. Have a great day.